Hello, everyone. As asset managers, we must ensure that we represent our clients' best interests, meaning that each dollar we manage is invested in assets that reflect an alignment between returns and risk management, powered by importing ESG components into the investment proposals. Today, we have the honor of talking about this with Sandy Voss, BlackRock's Global Head of Investment Stewardship and BlackRock member of our Global Executive Committee. We will be covering different topics around investment stewardship and sustainability through our conversation, getting insights on how, as asset managers, we ensure that we properly represent our clients, having core value our fiduciary duty towards them, and how stewardship plays a protagonist role in the investment process. Thank you, Sandy, for being with us today.
So very nice to be here.
No, great to have you here, Sandy. So let's start with the basics. What is investment stewardship, and why is it so increasingly important for the financial industry globally?
Yes, well, first of all, I'm very pleased to be able to speak to this important forum in Mexico, albeit virtually. I recognize that we've got a lot of interested parties listening in today. Great question about stewardship. So stewardship, at BlackRock, the assets that we manage on behalf of our clients, they are the true owners of the companies that we invest in. So we're effectively operating on behalf of millions of people and their futures, millions of people around the world. Investment stewardship is advocating for sound governance and sustainable business practices, because that then leads to long-term economic returns that enable our clients to meet their long-term savings goals. When we do this, we're focusing in on, traditional financial issues, but also material sustainability issues, because it is our investment conviction that is linked to value. We're fully convinced that, this is part of our fiduciary duty. We need to look at sustainability risk, because that's part of managing the money. It's our clients' money, it's not our money, and this is part of our duty. If we think about then what are the functions of stewardship, there's really three main forms that we take in. So first is engaging with companies, meeting with the investee companies, sharing our views on what good looks like, consistent with others in the industry. The second thing is voting. So we do proxy voting on behalf of our clients to the extent that they give us that responsibility. And then the third thing is really trying to shape market norms, working with regulators and other investment managers and other industry participants. In doing these things, we're operating as a truly global firm. So just to kind of give you a sense of the scale of the operation, last year we had 3,600 with more than 2,500 companies. This was globally discussing environmental, social, and governance issues. And, we do that, year in, year out, meeting with companies all over the world. Here in Mexico, we had more than 100 engagements last year with issuers, and that was mostly governance issues and as well some environmental issues have been going up the agenda. We also have begun to talk about social issues with Mexican companies, because we are cognizant that in Mexico as elsewhere, issues around social license to operate are gaining in importance. So you ask, why is this important for the financial industry? And I do think it's, it's not just that we're doing it, but why are we doing this? BlackRock is, along with others, seeking to provide access to diversified, low-cost investment solutions to as many people as possible around the world. You look at Mexico, population of 125 million and growing. We now have a product through our partnership with Banamex, Citibanamex, where we can actually $50 enable someone to become an investor. And that's part of our goal, which is to really increase the number of people experiencing financial well-being. Now, in doing this, then each dollar that we take in gets invested in companies. We form these long-term relationships, and those long-term relationships with companies, in our view, help us to generate value over the long term for our clients. So let me stop there.
No, this is super helpful to understand this concept, which I think it's really important, particularly for asset managers like us, that we would like to at all time, accomplish our duty, our fiduciary duty towards our clients. And to that point, let's dig into sustainability a little bit deeper. So research has showed, and by the way, this is not just research conducted by BlackRock, but by other institutions, that clients are more than ever concerned or focused on climate change, the treatment of employees, social factors, diversity and inclusion. Can you help us understand how stewardship helped millions of savers, whether it's that through pension funds, through employers individually, in advancing their sustainable financial goals?
Yes, well, so look, as I mentioned before, we offer a wide set of products to now more and more people around the world. While we may be working with institutions, big banks, big asset management companies, big wealth managers, ultimately the beneficiaries are indeed the people saving for retirement. It is the teachers, it's the factory workers, it's the former government employees, the nurses. Those are the people who ultimately benefit from what we're doing. And when we think about the relationship that we have with them, I think it's important to remember that 90% BlackRock's assets under management from the listed equity perspective are in index funds. And so that means it's fund. The position that we might hold on behalf of clients could be 20 times longer that we'd have that position than maybe a typical active manager. So these relationships really are durable. But very importantly, it also means that we care a lot about systemic long-term risks. It matters what's going to happen in 5 years, 10 years, 20 years, 30 years, because that's the duration that will be invested in the company. And that's ultimately the liability profile of many of the clients that we're operating on behalf of. And that takes me then, to sustainability risk. If you think about it, we have faced two unbelievably important events simultaneously in the past couple of years. One sudden, the other a creeping issue. Both of them, from our perspective, have significant value when you take that long-term perspective. So one of them is, we have this firm conviction about the links between stakeholder capitalism and value. So what we're very focused on is how are companies engaging with their stakeholders? And the reason for that is that our observation is that, the companies that are close to their employees, investing in their communities, that understand their customers and anticipate their needs because they are indeed interested, these companies are able to anticipate changes, get ahead of the competition, and generate more value. We've seen firsthand through the pandemic that the companies that were sensitive to their workforces and society, made tremendous strides in community well-being, in their own reputation. They were nimbly managing the important issues of protecting workers when they brought them back into essential work, or managing all the technology complications of helping people work from home and still delivering to their customers. We also saw some really terrible alternatives. Injured workers, people died, people were not protected or experienced, the trauma of layoff. It was a very, very broke certain relationships that companies had with very important stakeholders, and in some cases destroyed value. So we're very convinced that managing these issues through a cycle, through good and for bad, is essential. Switching to climate change, I think most people on this call are cognizant of the scenario analysis that we've seen from the IEA. We've seen the physical damage in a country like Mexico, where you are exposed to the physical risk of climate change. It's a hot country. It's not necessarily rich in water resources. These are really, really important immediate issues in Mexico, as well as all around the world. In that context, we've done analysis, we believe as a firm, and this is central to our investment thesis, that there's 25 points of economic gain over a 20-year period associated with managing climate transition well versus the alternative. And that's a very important number, but we don't think that that's yet been priced into the prices of companies and the prices of securities around the world. So we anticipate that there will be this tectonic shift in value. And as stewards, we are engaging with the companies that we feel are going to be able to manage this transition advantageously. We're also engaging with companies that we feel are not yet there, and we really see the importance to the long-term, value creation opportunity of companies that they anticipate and kind of face into the risks and the opportunities of the climate transition.
Well, this is super helpful, Sandy, and something, if you allow me to go a little bit deeper, and I think the audience would would be asking the following question. So you as head of stewardship in a firm like BlackRock, a firm that's trying always to meet the best fiduciary duty to our clients, what you're looking for public companies to accomplish, how you're seeing their progress towards a low carbon economy. So what you're looking for?
No, it's a very good question. And hopefully, we have published a paper on this, and it's something that I'm very happy to talk about, because we do want to work with companies on this journey. We want to be clear. We want to be consistent with what, industry agreement can be found around the right direction of travel. It's not just what BlackRock wants, but it's what's the right thing from a value perspective. Look, we do have a focus of companies in the most carbon intensive companies. There's over 1,000 that we've identified as being, about 90+% of the scope 1 and 2 greenhouse gas emissions in our client portfolio companies. So that's a focus for us. But what we're asking companies for is really to demonstrate that they have a plan for how they will manage the transition to a low carbon economy, how their plan aligns with a global net zero by 2050. And, this doesn't mean everyone will have the same plan. It means that companies will be able to demonstrate how they're going to survive and thrive in that global scenario. We're very interested in TCFD, so the Task Force for Climate-Related Financial Disclosures. That framework is excellent. And we're very interested in seeing short-term, medium-term, and long-term targets. So it's not about, we've got a massive goal 30 years from now, see you later. It's very much around, how are we going to demonstrate, our plan, even if it's not perfect yet. Most companies don't have perfect plans. Good, you can identify what good looks like, right? So what we're seeing right now, the best companies, whether it be in Mexico or around the world, is, you've got a coherent corporate strategy where sustainability and climate-related concerns fit in. It's not an afterthought tacked on, but it's part of how the company's setting its direction, if relevant. We'd like to see the capital expenditures make sense in the context of the commitment to climate. If you see a big disconnect between where the money is spent today and the long-term plans, that can be a red flag for us. For some companies, we should be seeing exciting new opportunities. What can not just the investment or disinvestment in poor activities be, but where's the future and what is the company doing to reposition itself? And what we don't like is a sense of dumping assets. So often there's a discussion around, divestiture and selling things off into private markets. And I don't think that helps the world. So we're very, invested in the transition. We recognize that companies will be winding certain activities down, but we also recognize that, that is part of this journey that many companies are on. The other point that I would mention is it is quite important, particularly in industries that use nature heavily, then it's not just a discussion about what are my carbon emissions, but we've got this related issue of the impact on the natural world that our business activities are causing. And so if a company is water intensive, if it's land intensive, if it's using forestry, if it's using animals, we're very interested in how is the company managing its relationship with the ecosystem more broadly. And final point I will make is that, this is not a situation where asset managers like BlackRock should be telling companies, this is our single magic answer. We recognize that ultimately the boards, the management, they're in charge here. They own the company or they operate on behalf of owners. We are the investors, but we don't tell. We, give a view and have, the right to engage and the right to vote. We're hopeful that we'll see industries coming together, agreeing pathways that'll get easier for companies to see the right journey. And we're really eager, to keep working with companies as they're working their way through, finding the right transition path.
Oh, thank you, Sandy. And let's go to something that could be more familiar to the audience. In this case, the region, LATAM and Mexico. So what can you say about the ESG journey here? And secondly, what main challenges are you seeing? But most important, what opportunities we have in front of us that we can, benefit from. I don't know if you can talk a little bit about that.
Sure, no, I'd be happy to. And with thanks to my colleagues who spend all of their time engaging with Latin American companies, particularly here in Mexico. So look, we've actually been quite heartened by the quality of the dialogue we have with many companies in Mexico and more broadly in Latin America. I would say that Latin American companies are earlier on the ESG journey, if I were to overgeneralize, than perhaps say certain European countries. But we engage with companies all around the world, and what we really appreciate is companies that want to reach out, they want to learn, they want to be the best, to make themselves as transparent to and attractive to international investors. And I think a lot of Latin American companies are growing, and when you're a growth company, you know that you need not just debt financing, but equity financing, and that then makes that dialogue around approaching the market so important, right? So where I would start is company disclosures. So what we would say is kind of the classic good governance issues are very important for us in Mexico and in Latin America. So we do find that, very good quality basic disclosures around the board, its composition, the activities and decisions taken. That's really where we would first like to see Latin American companies focus, demonstrating the how they are managing the composition of the board would be a real priority. Sometimes in Latin America, we can't really see as much as we'd like to about the people on the board, their backgrounds, their professional qualifications. So really understanding who's on the board, why are they on the board, why are they additive, how are they independent? That's a really critical set of questions for us. The other point I would make is in Latin America, we often see directors who've been on boards for a very long time. And we actually very much value the knowledge and the depth that those seasoned directors bring. But we think it's important that Latin American companies think about the mix of experience and perspective that's brought by their board members. And we like to see that those seasoned directors are also complemented by some newer members who are more independent from the perspective of that company and perhaps are bringing different insights, a diverse perspective. So I think that's an important point that I would bring, essentially because that fresher and more dynamic board holding itself up in a more visible manner, from our perspective, enables us as investors to see more about what's going on, but also to have more confidence that that board is holding themselves accountable to the investor community. If I were to look at environmental opportunities and risks, what I would say is that, climate change is a very important issue, specifically in Mexico. And what we're finding, which is really, really heartening, is that when we talk about environment and climate-related issues in Mexico, we're seeing really, really tremendous progress. So think about a cement company that we've engaged with in Mexico, really great TCFD alignment, sustainability accounting standards reporting. These type of disclosures are so valuable to us. And in part, it's because you can't actually do quality environmental and sustainable disclosures if you aren't also managing what you're doing. When companies come to us and say, what should I put in my report? We say, you're asking the question upside down. What should we do well? You answer that question first. How do we become more sustainable? The report flows from good governance, good risk management, good plans, good targets. Then we can see a good report that comes out. Thinking again about, a Brazilian beverage company, it's a classic case of an opportunity where the company saw that they could take a more circular approach to the way that they were using materials and, have reduced packaging, they've reduced emissions, and that circularity. We don't see a lot of companies yet in so-called developing markets who are really embracing circularity. And so that's a great example. But look, I think what we would say is it is great to see Mexican companies, Latin American companies saying not climate change and the environment are somehow a global north problem, but rather we can leapfrog. We can take our starting point, our strong position in critical industries, many of which might either be carbon intensive or resource intensive. And, let's embrace the opportunity to maybe leapfrog other parts of the world, leapfrog our competitors by maybe taking some bold moves. So that's been a really fruitful dialogue, and we're very happy to continue it because, again, just to emphasize, the reason that we are interested in these topics in Mexico, in Latin America, whether it's governance, it's social issues, it's environmental issues I was just talking about, is because these are companies that we, on behalf of our clients, will be invested in for decades. We hope that we will be meeting with these companies every year, seeing the progress, discussing the challenges, and over time, better ESG management. In our view, that is what's going to produce better financial results for our clients. And by the way, all of the investors in these companies, so our interests are very much aligned.
No, thank you, Sandy. And I think we're close to our time, but didn't want to end the conversation without saying that it has been of great relevance listening to you and to understand more deeply the importance of stewardship, work, and its added value in our investment process while contributing to building more resilient economies and delivering long-term value for all stakeholders. We have seen also how important our role as asset manager is, advocating for our clients' needs in their investment on public companies. Aligning purpose, strategy, and culture within a company is key to its ability to preserve and continue to create value for all its stakeholders. Today, more than ever, we need to ensure that companies in which our clients have investments are also ESG ambassadors and support best-in-class business practices that drive sustainable, long-term financial returns while increasing our clients' capital and helping them achieving their goals. Sandy, this has been a great time talking to you. Thank you very much for participating today with us.
Pleasure to be here. Thank you for having me.
Well, thank you.